Welcome to Markets Now. I'm Michelle Rook along with Bryan Doherty with Total Farm Marketing here at Commodity Classic. And Brian, as we speak, we've got mixed trade in both grain and livestock futures. We've had a pretty good sell-off in the grains this week. It looks like corn and wheat are trying to come back here. Is that just maybe a little bit of short covering because we're oversold or what?
Well, I think it's a little bit of short covering. It's just acknowledgement that the market all of a sudden has become value to end users, and we're really close to filling some gaps on charts that were some technical objectives. And the charts are also indicating oversold, what I'd call extreme oversold in wheat, and now in the corn market. So there's the bulls out there who want to start looking for an area to buy. Will wait for a signal usually, but today we may give them. We were lower earlier, now we're a little bit higher. That could, by the end of the day, if it holds up, that could be, or that would be called a bullish hook reversal. And if the market really screams higher and takes out yesterday's high, that'd be called a bullish key reversal. At the bottom of the trend, that's the kind of signal that traders look for to exit shorts and start going long.
Soybeans have come off their lows, but we really need to hold $15 today, don't we?
We do, but the bean market has been fed some bullish news along the way. You look at the WASDE report, reduction in carryout.
Right.
Look at some private estimates yesterday, reductions again to the Argentine and the Brazilian crops. When you look at those fundamental factors and just how tight supply is, that's what we need to watch for. Now, that being said, $15 is a high price for beans when you're not exporting them. And we had a negative export number this past week. So the export market trailing off quite substantially. That's probably my biggest concern right now.
Cattle market consolidating today. Cash trade just steady. So is the market maybe a little disappointed with that, or is this just profit taking in an otherwise bigger bull market?
Yeah, it's an otherwise bigger bull market. Farmers who have raised cattle recognize how fast things can drop. They only have to look at the wheat market. I think there's some hedge pressure in the market as well.
Sure.
So there's some profit taking by the bulls. Those who've been trading this market, if you've been diligently buying the dips and when you don't get too greedy selling the rallies, it's rewarded you well. So that pattern has continued. At some point, my worry is that with inflation and consumers maybe spending all of the COVID money, that at some point we're just going to see demand start to really suffer or switch to something cheaper. We talked about pork being a cheaper product right now, poultry, debt issues, higher interest rates. We worry about all of those things.
Yeah.
Consumers are going to have to be pretty careful with their dollar the way it looks.
Hogs seeing a little bit of a bounce today. Is that just some short covering? Are we unwinding spreads with cattle, or what is it?
That's probably both. I would say probably more unwinding the spread with the cattle hog. It's been a really good spread to be in, and you probably made money on it. So it's time to unwind it when the cattle look like they pay. And hogs, what an anomaly this year. It's hard to get a good handle on why the cash market has been so stuck or gradually moving upward when the futures market has been way ahead of that. And so that's been part of the problem if you're a trader trying to buy what should be several fundamental factors friendly to hog prices, but the futures is already premium to cash. So the cash will act like that magnet and pull it back down.
All right. Well, thanks for joining us here from Commodity Classic. That is Bryan Doherty with Total Farm Marketing. I'm Michelle Rook, and this is Markets Now.